All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So, there are candlesticks and there are profitable candlesticks in the forex market. I come again, there are candlesticks and there are profitable candlestick patterns and formation in the forex market, right? So, as a price action trader, you can't do without candlesticks. As a matter of fact, candlestick is the hallmark of price action. Candlestick is the hallmark of price action. You can't trade profitably without candlestick. Candlestick is like a cheat code to whatever you are trading. Whether you are trading the currencies, whether you are trading the commodities, whether you are trading stocks, no matter what you are trading, candlestick is like a cheat code. It makes trading easier for you. But the most important thing is to get the right candlesticks to use and the rest. And my years in trading and the time I've spent in this market, I'm here to share with us part of the secret, and this is the particular candlestick I'm about to share with us right now. This candlestick pattern and formation I'm about to share with us now has helped me so much in the business of trading. Not only me, I am my people, my clients, and the rest in this same market. So you can also make use of this same candlestick pattern and make a whole lot of money, make a whole lot of bucks in the forex market. This is one of the best. This is a killer strategy. So you go to the market, kill the market with this strategy, right? Kill the market with this strategy. Kill the market with this strategy, right? So let's go ahead. So what type of candlestick am I going to be sharing with us today? So before we go ahead, remember to share to your friends, especially for our daily analysis, the videos and the rest, for them to come capitalizing on it and making a whole lot of money from the market. Remember to share to them. That's the most important thing. And if your first time, also subscribe on your notification. Your questions, your trading questions, drop them below the videos and I will take all the questions. Right. So what do we have today? So we are talking about nothing but the dark cloud pattern. Now, this type of pattern is not common in the forex market. This type of pattern, the dark cloud, is not common in the forex market. But whenever it's spotted, oh my goodness, it's a killer strategy. But the most important thing is to understand it. I don't just teach a pattern. I tell you why that pattern is formed and what is expected, what happens, and that's what you need to know for you to be able to interpret the market and know the direction to go. Now, the dark cloud pattern, what is the dark cloud pattern we are talking about? Now, the dark cloud pattern, this is a reversal pattern found at the resistance zone. It's usually found at the resistance zone. It is found at the exhaustion of an uptrending market. So you don't think of seeing it at the support level, no, or a downtrending market, no. You see it at the end, or let's say at an uptrending market, when the market is about to reverse, when the market is about to make a reversal, that's where you see it, right? So the market has been making a higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. It will get to a point, it will not continue buying forever. It will get to a point, it will try to reverse. Now, these are patterns that formed at the resistance zone before the reversal, telling you that this market is about to reverse. But it's only those of them that knows this pattern that will be able to capitalize on it and make judicious use of it, right? So you see the market, higher highs, higher lows, higher highs, higher highs, higher lows. So before that market reverses, not all the reversals you find dark cloud, but on few occasions that you see it, it shows reversal, and that reversal 90% of the time plays out. This type of pattern is a killer pattern. This is a reversal pattern found at the resistance zone. It's found at the exhaustion of an uptrending market. The candlestick pattern is made up of two candlesticks, the bullish candlestick represented as green and the bearish candlestick represented as red. It's made up of two candlesticks. Remember, at the resistance zone, the initial candlestick, which is the first candlestick, is the green candlestick. Then the second candlestick is the red candlestick, made up of two candlesticks, right? So this is what we are trying to talk about. So look at what you're trying to talk about. You can see the dark cloud cover. the dark cloud cover, the market buying, 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 buying. We will look at for an example here too in the chart. The market buying, 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 buying. But getting to this particular place, what happened? What happened here? You can see at the close of this candlestick here, at the close of this candlestick here, there was a bearish candlestick forming below, closing below. So that is it. But what makes it unique? What makes this type of candlestick unique? That's what we are trying to talk about right now. So that even in your sleep, when you spot it, you know that this is the same killer strategy we talked about. When you spot it while asleep, when you spot it anywhere, in any security or any chart, you know that this is the strategy we talked about. So what makes the dark cloud so unique? So that brings us to the characteristics of the dark cloud. They are reversal patterns. That's the number one thing you have to note. They are reversal patterns. Whenever you see dark clouds in the market, they are reversal patterns. They are reversal patterns in the market. Not only are they reversal patterns, they are not continuation but reversal. They are made up of opposite candlestick, two opposite candlesticks. What do I mean? Two opposite candlesticks. You can see the green candlestick, which shows the bullish or the buyers, and the bearish candlestick. So two opposite candlesticks. Not only that, the bearish candlesticks gaps up before the close below. That's the uniqueness between this candlestick and every other type of candlestick. There is usually a gap up before the close, before it starts closing below, rather. There is usually a gap. You can see at the close of this candlestick here, there was a gap up. Ordinarily, this bearish candlestick is supposed to have started here, but no, it gave a gap to the upside, closing below. Let's go to the chart. Let's see what I'm trying to talk about. I think let's quickly go to the euro. Okay, let's go to euro GBP. Let's see if we can spot it there. Euro GBP. This is our daily time frame. So this is our daily time frame. Euro GBP. Euro GBP daily time frame. So we'll definitely spot it. Euro GBP daily time frame. Euro GBP daily time frame. Okay, let's look at this. This is an example of a dark cloud. You can see here, this is an example of a dark cloud. You can see this example of a dark cloud. You can see it here. There was a gap up. You have to put it into consideration for you to see it. You can see there was a buy, 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 buy. But at the end of this, or at the close of this candlestick, there was a gap to the upside. The gap is visible. Ordinarily, another candlestick, whether bullish or bearish, is supposed to have started here, but no, it gave a gap to the upside. It gave a gap to the upside, opening above, not even moving too much to the upside, closing below. And another thing you have to note about this dark cloud is that the close, when it's about to close, especially the bearish part of it about to close, inside the initial candlestick or the initial bullish candlestick, it has to close 50%. What do I mean? It has to make 50%, at least half of the initial candlestick. You can see after the close of this candlestick, there was a gap to the upside, closing below, but at least it gave a close below like 50% of the initial candlestick or the bullish candlestick. This is what is called the dark cloud in the forex market. Dark cloud, you can see at the end of the day, there was a sell, sell, sell in the market. Dark cloud is a killer strategy. Let's quickly check if we also see others. Dark cloud is a killer. Oh my goodness, look at this. Look at this. I think this one is still obvious. You can see after the close of this candlestick, there was a gap to the upside, closing inside the previous candlestick. Inside the previous candlestick, 50% of the initial candlestick. This is from here to here is 100%. Then closing 50% of this 100%. You can see at the end of the day what happened. There was a sell, 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 sell. sell, 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 sell. Dark cloud is a killer strategy in the forex market. Dark cloud is a killer strategy in the forex market. It's a dark cloud, a killer strategy, a killer strategy, a killer strategy. So that's why on the slide here, one of the characteristics we said made up of two opposite candlesticks. The bearish candlesticks gaps up before the close below. The bearish candlesticks gaps up. Like this, the bearish candlestick, it must gap up before the close below. If it doesn't gap up, it's not a dark cloud. So that's the uniqueness in dark cloud. There must be a gap to the top side before the close below, or before it coming down, or before it coming below, closing at least 50%. That's the difference between dark cloud and every other candlestick pattern, right? So the bearish candlestick must close minimum 50%. We've said that it shows a shift in momentum. That's the difference between dark cloud candlestick and every other candlestick pattern. Dark cloud candlestick shows a shift in momentum. That's why 90% of the time it plays out. 90% of the time it plays out. 90%, provided you are doing the right thing, 90% of the time, dark cloud plays out and works in your favor. It shows a shift, a sharp shift in momentum. Dark cloud shows a sharp shift in momentum. So whenever you spot dark cloud, oh, that's a very bad and a killer strategy. Use it to kill the market. Use it to kill the market. They are found at the end of a bullish trending market. They are found at the end of a bullish trending market. So whenever I spot it, capitalize on it. Is a very That's one of my secrets in candlesticks. I use it in dark cloud pattern. Not very common. They are not very common, but whenever they are seen, they are they play out in the forex market. So that is it for the dark cloud. So I've shown us a good example on our chart. This is euro gbp. You can see this is a dark cloud pattern. This is a gap must be there before it closes below. There must be a gap before it closes below. I showed us that. Okay, this is another dark cloud pattern too. You can see at the end of the day, wherever it's spotted, it goes towards that direction, right? So we go to the next thing we have, which is the direct opposite of the dark cloud, the piercing line pattern. Piercing line pattern, the piercing line pattern. This is a reversal pattern better seen at the support zone, which is made up of two opposite candlesticks. This pattern or this type of candlestick is made up of two, or this type of pattern is made up of two candlesticks. In other words, it's the direct opposite of the dark cloud pattern. The piercing line pattern is the direct opposite of the dark cloud. The piercing line pattern is the direct opposite of the dark cloud pattern. Whenever it's spotted, it's a bullish, it's trying to tell that the market is reversing for a bullish move. It's reversing for a bullish move. So look out for a buy. Look out for a buy. You can see this is a bearish candlestick. The market must be in a downtrend first. Then there must be a gap down. Then another bullish candlestick closing at least 50% inside the initial candlestick. That is what a bullish or a piercing line pattern. This is a killer strategy. I decided to take this differently for we to see it. This is a killer strategy. Kill the market with this. So you can see they are direct opposite of the dark cloud. That's one of the things you have to know. They are usually found at the end of the downtrend. Found at the support zone, they are reversal patterns in the market. They are reversal patterns in the market. The bullish candlestick must gap down. It's a must. It must gap down. That's the uniqueness in it. They must gap down. The bullish candlestick must close 50% or above the previous bearish candlestick. The pattern shows a change in momentum. Both the dark cloud and the piercing line pattern, they show change in momentum. They show change in the momentum. So let's go to our chart. Let's see if we can spot something like that. Let's go to our chart. I think we saw it the last time was on our NZD. USD, NZD USD, NZD USD, NZD USD, NZD USD, NZD USD, NZD USD. The NZD USD. So let's go to our daily time frame. We are looking for the piercing line pattern. The piercing line pattern. The piercing line pattern. All right, we've seen it. So we've seen a good example. Here you can see this. You can, okay, no, this is not it. This is not it. This is not it. This is not it. But whenever you spotted, let's see if we can find it on the chart. Let's see if we can find it on the chart. Let's see if we can find it on the chart. It's here. If it's there, it's there. If it's not there, it's not there. I think the last, okay, let's check for 2022. Let's check for 2022. So this is a piercing line pattern, but it's not that obvious. So we have to look for the one that is more obvious for we. Yeah, so I think we must get it here. That's a killer strategy. That's a killer strategy. Okay, this is it. This is it. You can see this. This is a piercing line pattern. Let me quickly zoom in. This is a piercing line pattern. Look at this. Thought we saw it here. Right? Okay, this is it. A piercing line pattern. You can see after the close of this candlestick, after the close of this bearish candlestick, after the sell, there was a movement to the downside, giving a gap. You can see the gap here. The gap is obvious. Then closing at least 50%, even close more than 50%. What happened? At the end of the day, there was a buy in the market. It's not common, but this is a killer strategy. Whenever it's spotted, it's a killer strategy. You can use it to make as much as you wish in the market. The dark cloud and the piercing line pattern, the dark cloud and the piercing line pattern. Whenever it's spotted, you can use it to finish the market as many times as you want. So as a way of recap, we started with the dark cloud pattern tonight. We started with the dark cloud pattern. The dark cloud pattern. So dark cloud pattern. So we say the dark cloud pattern is a reversal pattern. That's the most important thing you got to know. So the reversal pattern is made up of two candlesticks. The first one, the bullish candlestick, and the next one, the bearish candlestick. But the difference, the uniqueness in this type of candlestick pattern or formation is that there must be a gap above after the last bullish candlestick. After the last bullish candlestick, there must be a gap to the top, then a close below. After the last bullish candlestick, there must be a gap to the top, then a close below. At least 50% of 50% of the initial candlestick, then you can now go in for what? A sell. After spotting it and the close, you can now go in for a sell. The higher the time frame, the better for it. The higher the time frame, the better for it, right? So you can see the characteristic, the reversal pattern made up of two opposite candlesticks. The bearish candlestick gaps up before the close below. We said it. The bearish candlestick must close minimum 50% of the previous bullish candlestick. It shows a shift in momentum. They are found at the end of the bullish trending market. Not very common. They are not very common. we showed a good example here. Then the piercing line pattern, this is a reversal pattern better seen at the support zone, which is made up of two candlesticks, right? So this is a good example here. This is a bearish candlestick, then a bullish candlestick, closing 50% of the initial candlestick. Then you can now go long or go for your buy in the market. So that is it we have for today. That is it we have for today. So this is a killer strategy. Go kill the market. Win, win, win for all. Kill the market. Remember, if this is your first time joining this channel, to hit the subscribe, share to your friends, make them to know about this wonderful and good news for them to benefit from it. All right. Thank you, thank you, thank you for joining us. Thank you for joining us, and enjoy your